Hey everybody, DayTraderRockStar here, and an MES review of the divergences today. Trades that could have been taken, the trades you should have taken. And I'm doing this tonight. I'm at my home office. I'm doing some trading right now. I'm live. It's about 9:50, almost 10 o'clock p.m. And I am addicted to MES trading now because I am starting to see the setups very clear, feel really good about them. I think the discipline is really good now, taking profits real fast, understanding that if I was walking down the street and I saw a $20 bill, I'd stop and pick it up real fast. So I always use that as an analogy. Some of these trades could be real fast, and if you're trading the MES, they could be, you could just buy a couple contracts, and these things are moving pretty fast. Since we've had the correction in the S&P, the correction in the high flyer, valuation correction, the NASDAQ, the FANG stocks, and then we have the new variant coming out. The market has been taking big swings, and these swings off the 1 minute time frame have been on average, and I've been, I'm in the markets every single day, every minute. On average, you're seeing 5 to 10 point moves off of, pivot areas and move up, move down. Lots of these things are way over 10 points, but on average, you're getting way over 5 to 10 points. This is perfect for this type of trading. This is, and you could continue to trade this low risk with the MES, which is 1/10 of the ES, or if you feel comfortable with the ES, or then trade it with the ES. It doesn't matter. What matters is, what I continue to stress, is that you have to push the button to get into these trades, or else they'll pass you by. And what happens is any hesitation, you'll end up chasing. And you just don't want to chase in this market. You want to identify. And the signals are clear. It's not that you're going to get 10 points on every trade. There might be some trades in a downward trending market that might only give you 3 or 4 points. But if you recognize that and say, all right, we have a fast rotation. Here is a good example. We have a little divergence, but we rotated real fast, and we only got a few points right here. That tells me something. That tells me that we probably should get out because we're overbought right here. And maybe we didn't get more than the 2 points on that. But you know what? That's fine. That's fine in a $20 bill on the ground. And you want to pick it up, you want to take it, and you want to have patience to wait for the next thing, and they add up. I've been trading a little tonight. I'm up to $141. Trading just 1 to 2 MES trades, contracts. And overnight, during the day too. So it's not you just have to be in front of the computer. You have to be in front of the charts. Right now, like I said, it's about 10 o'clock. It's almost 10 o'clock now. We just been selling off just to catch you up on the news, and I'll go over the setups that you should have taken today. 5 new cases in New York, and we kind of predicted that today. So what's going to happen when we have a cluster of new cases? We're going to see how the market reacts to that. Well, it reacted down. We're down 20 points. Who knows, when we wake up tomorrow morning, we could be down 60 points. There could be more clusters. It could be a breakout. I don't know. But I do know one thing. I don't want to miss a divergence. I want to be emotional, non-emotional. I want to be emotional, man. I want to be non-emotional. I want to just feel like, hey, I'm not going to have a decision. I'm not going to care which way the market goes. I just want to get the setups. So that's what we're going to focus on. And today, like I said, tonight, there was a little setup here. We just measured it out. And I'm just going to go back here. Now, this is the pattern that's playing out right now. So actually, it's a beautiful pattern. It's a 1, 2, 3 pattern based off of 1, 2, 3 pivots. I just wanted to check on my kid before he was doing some math. I said, "Sorry, what kind of math are you doing?" Because I'm waiting for him to tell me he's doing geometry or something with angles. I said he's doing all kinds of stuff, But I said this is just it's basic geometry, it's basic math, it's basic momentum, it's basic stuff that it's logic, it's a lot of things that you could easily see how exact this market is. Because I had one pivot here. Well, actually, it's 1 pivot, 2 pivot, 3 pivot. Once you have 2 pivots on one side, you draw that parallel, you draw that straight line, that channel line, that trend line, we're going to call it. So you have a trend line, a line. First rule of math or a line. You need 2 points You connect those two points, that's a line. And that line goes into the future. And whenever you come up to that line again, there's algorithms, very easy to predict that. We can visually see it, but you could calculate a point, an axis, and a y-axis, an x-axis based off of the history of this, and it's very easy to know when the price comes back up to it. And once you have that top trend line, it's very easy to clone that, drag it down to the main pivot. At the time this was happening, this was the 3 that I was doing, and then the price came right down to here. And look at how we bounced off of that. And you got to know that these are algorithms hitting this and market. And you could be your own algorithm. You don't have to have any fancy machines. You just have to know some technical levels and charting and stuff. So this is what the market's looking like. So I'm just going to go back. And what we're looking for is the classic divergence. And this is every classic divergence I show you. And the criteria, my criteria is a little bit more, what's the word I'm looking for? Exact, or a tougher, bigger criteria. But this is it, right back here. This is a perfect divergence. I ended up taking this one earlier. It was right before 8 o'clock. 9 o'clock, yeah, right before 8 o'clock. The pop here, and we came back quickly, and we just about took out the lows barely. But look at the steepness here. And I remember, I was actually doing this on the other. I was actually I logged into my computer at my office, and I was trading through that computer. So you might have been seeing me on the office computer putting some of these lines in on the other charts. And you see how steep that is here? How this comes back and it holds above this blue line. This blue line is really the 20 line. That is textbook. It's a little bit lower, but it's a very steep divergence. And once you identify that and get that first candle, you need to get in. The rotation gives you pretty much a nice little move, 5 to 7 candles. After the turn up right here, you had 1, 2, 3, 4, 5, 6, 7 candles, just like I always preach. And then we kind of turned over, and once we turned over, that's where I put in that channel line. And then when we have those two lines, and we put that lower line in there, whatever the lowest pivot is there, then you could start to manage any of the trades that come there. Now we're in the middle of this, but let's keep on going back here. Now, this was at 8 o'clock, 7 o'clock. There was some divergences here. Just going back, and again, the criteria, what I'm looking for here, the criteria is right here. Now, I marked them all on the chart at work today, so they're all on the other chart, so I have to go back and refill these. But you should be able to now say, all right, what's the criteria? Criteria is market comes down and makes a low, and the low is represented by the stochastics getting oversold. Doesn't matter if it's a low of previous day. I'd like it to be, a decent low, maybe, at least 10 candle low, or at least, in this case, you want to sometimes even find a channel like this. And it's hard. It's kind of a extension candle here. It's choppy, but you want to just get a directional move, and you get a low, and then you bounce, and then you come down and you take out the low. And taking out that low and then getting another candle starting to turn back up here, that is your divergence. You get in, here's your 5 to 7 candle move up into overbought levels. Now, you see here, we're kind of pointing down on the 60-10. Because the 60-10 is pointing down, that means the bigger trend is down. Until we got down to this point where we started getting oversold, and then the bigger trend started moving up. That's important to realize, because that's going to help you take your profits. When you want to take profits, it's going to help you take your profits. I'm not even talking. I didn't even put this on the air. I was recording this, but I wasn't. I didn't have this. I apologize. So this is a secondary divergence here, or another divergence here. And it was off the 200-period moving average too. And let's be realistic. Like I said, I'm zoned in here. So I could see this. I feel that the turn up. I'm probably catching this probably right around that. Give us the benefit of the doubt. Say we're getting into 45.70. 45.70. It went up to 45.80, but let's again give it the benefit of the doubt that we're not getting all that. That's 10 points. We want just 5 points. If you have 2 contracts of the MES, they're $5, $5 a point. So we'll just say we're just trading 2, 3 with $10 a point, and you get you're looking at a nice trade, $40 trade fast. Did I do the calculation right on that? 5 times, yeah, that's it. You do that a few times, you're busting over, and that's the minimum. That's the minimum. Multiply that by how many contracts you want to carry. 5 contracts is half of 5 contracts of the MES is half of 1 ES. Remember, 1 ES is $50 a point, represents and 1 point represents $50. 4 ticks is $12.50. 12 and a quarter. The MES is half of that. It's 1/10. Excuse me. It's the MES is 1/10 of that. So if you could take 5. That's what I wanted to point out. You could take 5 of them, and that's basically half of an ES. So each point is giving you a half of an ES as $25 each point. You get 4 points. That's a $100 trade right there. $100 trade. That's nice. It takes you 4 or 5 minutes, and you bank $100. All you're doing is waiting for the next setup. All right, and that's minimum. That's 5 contracts. Now, on a discounted broker, you're putting up $50 for margin per contract. That's $250 you're putting up. You just made $100. I mean, what kind of and you have the exact criteria right here, and you get those moves every time. Every time, unless you get bombarded with some kind of stupid news or something like that. Here we have, and this happened at about 11 o'clock today, what we call it relative divergence. This is something I coined because lots of times you'll see the price come down, and you'll see a candle come down, but mathematically this doesn't take out this low. And because it doesn't take out the low, you'll get confused and you'll say, well, that's not a real divergence. But most of the activity is here in the closing prices in here. And you'll find out that if you see that the price moves up, everything is good, it's oversold, moves up, comes back, comes down basically to that same level. It didn't take the extension bar there. It didn't get all the way down there. But most of the, and this is holding up, especially on the 14.3 here. This is really what stands out because you have the 9.3 and you have the 14.3. The 14.3, look how high that divergence is, or how high that stochastic is here compared to where the price is. That is worth taking a shot there. And again, look at that move. So that is really an important part there. And that's a relative divergence on the 14.3. The 14.3 is actually good. I like to see the divergence on both. When we talk about a criteria and how the criteria should be above 20, this line should be above 20, on that pullback. And if say it pulls back to 17 or 18, there's at one point you're going to have to say, well, where do I draw that line? Literally. Do you hold that 20 line? You want to get a good divergence? Well, if we do have that good divergence on the 14, I consider that actually a stronger setup. So I would take that on the 14. Preferably, I like to have them set up on both. All right? So that was a good divergence right there. Really good divergence. And, again, not to tell you that you probably could have gotten this at 55, 56, even as it gets into the next candle. Moved up a little, pulled back. It flagged out here. It's really, you got a little move and you're starting to pull back. But the 5 minute here, it's tough. That's a tough call how you want to take profits. That's why you have to have multiple contracts, because you get in at 55, you're up to, look at this move, actually. You're at 55, 56. This went up to 63, 60. I mean, this is over a 5-point move anyway on that rotation of the stochastics here. So you're getting your 4 to 5 points anyway. Multiple contracts. Again, 5. If you had 5 MESs, or 5 MESs, and you're getting 4 points, that's another $100 trade right there. So this was a perfect setup here. 9:30 in the morning. This was it. This was the best trade of the day. It was a divergence. We could see it. It was a running divergence. You could see the low came down here. We have higher lows across the board. This is a real good divergence. It's a dual divergence. It's like you had a low here, came down. We popped, came back down, put a little low in, but we held a higher low, and then it just ripped higher. Anytime around 9:30, you start to see a divergence. It's probably going to be one of your best setups of the day. Here's a slight divergence over here. I was at 850. It was a good divergence. I mean, it kind of popped. We had about 4 or 5 candles before we kind of rolled over and then popped a little bit more. And that little pop right there was a sell side divergence from here to here. This from this high to this higher high. That's something you have to learn also. I mean, you have to recognize the downside if you do see some kind of... So you had a nice little move here. Benefit of the doubt, 45.16. It got up to 45.19. Maybe it was 3 points. Pulled back and then kind of popped up here. Again, if you don't worry about... What I would say is you take the majority of your contracts off on your first rotation. You move your stop up to break even, and you let it go. So if this captures your stop at break even, it's c'est la vie, inshallah. That's okay. You might, but then you see a little divergence, sell side divergence. If you wanted to go with that, you had it. So you had 1, you had 2, you had a sell side divergence here. And I did take a sell divergence today, and I got out of it because I said, you know what, this market's very strong, and I said I'm not going to fight this battle. I'm not going to go against the strength of the market. And I think I'll show you where it was, if I can find it. It was towards the end of the day. It might be harder to find. I don't see it. Maybe it was here. Maybe it was that little candle here, and it was here. Maybe it was. I don't know. I mean, eventually it did work out. Maybe it came back down. I don't even remember. I took it off. I said, you know what? I'm not going against. That's rule number. Whatever rule you want to make it. Try to trade with the trend. With the strength. The strength is down. Short side divergence would probably work a little bit better. So that's just, there wasn't many trades, but they all add up, and you have the overnight trades. I didn't even go out to overnight, and you could be probably, it could be addicting. It could be, you could get greedy doing this. You could do a lot, it's not the, you could get addicted to doing this. As you can see here, it's almost 10 to 11, 10:10, and here I'm still trading. But, the key is to be in front of this, take the setups, make the money, have the money ready for when you have a divergence like this. When you have a nice divergence like this, or a very steep divergence. Remember, our angle is really important. The angle of the divergence, how steep that line is very important. That's a degree line. It's a steeper line at a 45-degree angle. I like it about 10 degrees. I mean, that's a great one. And you get an explosive move. And say you had, you graduated up to, and you're trading the ES, and you have 5 ES on, because you feel super comfortable trading this way. And all you're doing is waiting for that perfect divergence. And you have that, or let's make it easy. Let's make it 2 ES. 1 ES, that's $50 a point. 2 ESs. Times 2 would be $100 a point if trading 2 ESs. All right, on these, and you're getting 4 points. So you're talking about $400 trades on each of these divergences. Do that a few times a day, and being able to do it whenever you want to do it. So that's that's it. That's just an updated video, and kind of stressing the importance of taking the swing when the pitch is over the plate. All right. I'm going to send this out and actually upload this to the YouTube channel, and it'll be stored there. Because I'm doing a series of videos trying to keep a good record of all these, can build confidence, to build a good understanding of these setups, and understand that we're going to be the weakest link. If we miss a position and end up chasing, that's probably going to lower our success rate. If we end up not taking it, then, well, you're not going to get anything from that. And if you're greedy and you're saying, well, I've been getting 4 or 5 points, it's only giving me 2 points before we got overbought, I want to hold on, I want to get some more, that's going to tear you down too. So the weak link is the trader. Remember, get the position, take half off as the rotation happens on the 1 minute time frame. The one last thing I didn't mention, if you have a good setup here, say you have a divergence in the 5 minute or the 60, this is the 1 minute time frame, and that 60-10 is oversold and starting to move up, and you have a divergence, you're going to get, look at the size of this move up here. Look at this. The 5 minute chart is now grinded up slowly. 5 minute chart's oversold, grinding up, bigger moves. So if you remember if you have that 5 minute rotation in your favor, oversold. This is actually a nice, was a 5 minute divergence. Let's just, while we're here, I want us to run over to the 5 minute chart here. This is what the 5 minute looks like. And again, you'll see the same, you can see the same setups here. Here is a 5 minute setup at 3 o'clock in the morning last night. Right there. And that's a pretty decent move. In a 5 minute time frame, instead of 1 minute candles, these are 5 minute candles. 5 to 7 1 minute candles, 5 to 7 minutes. 5 to 7 5 minute candles, 25 to 35 minutes in the trade. That gives you a much bigger move. That went from 45.30 to 45.48. I mean, we're talking good profitable trades there. So we have to keep an eye on that 5 minute time frame. We have to keep an eye on, here's another nice double bottom divergence here. And again, that was moving on up. And we might see something tonight. Let me see where we're at here. There we go. That's the 5 minute. We don't have anything yet. But that's it. So let me leave off with that. Have a great evening. I want to stay here, trade with you guys a little bit more, but I want to get this video out. All right, it's 23 minutes. I wanted to keep these things under 10 minutes. I guess I'm not doing a good job on that. All right, let me send this out.